Hello traders, welcome back to the Forex gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the fry pan bottom pattern, a powerful reversal formation that can significantly enhance your trading strategy. This pattern, often overlooked by many traders, has the potential to identify key turning points in the market, offering valuable entry opportunities. By understanding how to recognize and trade this pattern effectively, you can gain a competitive edge in the forex trading endeavors. So stay tuned until the end of this video to learn how to spot, confirm and capitalize on the fry pan bottom pattern in your trades today. We start by understanding what the frying pan bottom pattern is, and this pattern is basically a bullish reversal formation that typically appears at the end of a downtrend. This pattern is driven from the name and its distinct shape resembling a bottom of a frying pan, each curved edge. Now let's look at some key characteristics of this fry pan bottom pattern, which includes, first of all, you get an initial declining, where you see an initial declining, which is a series of long red candles. You see long red candles showing a sustained downtrend, followed by a round bottom, like this, a sequence of small bodied candles forming gradually a curved bottom. These candles indicate a slowdown in selling pressure and growing indecision among traders, followed by an upward movement. As buying interest increases, the price action starts to curve upward, and this is basically what this pattern is about. Before you meet a breakout where this pattern is completed by a significant bullish candlestick that breaks above the resistance level formed during the downtrend. This is basically what we are talking about. There breaks and forms between this resistance level formed during the downtrend. This resistance level is also at this area where price failed to break this area. This can also be a resistance level too. So once price breaks with a bullish candle and close above that resistance level, it signifies that bullish sentiment are now in the market and they are ready to take control of the market. So let's see how we can incorporate the frying pan bottom strategy to our trading strategy. How we can incorporate this frying pan bottom pattern to our trading strategy. First of all, we identify the pattern. We scan through our charts to find a potential frying pan bottom formation. We look for a clear downtrend followed by a series of small body candles. As you can see, there are small body candles at the low. These are the small body candles at the end, forming a curve, a round bottom. These small body candles form a round bottom. This pattern could conclude with a bullish breakout candlestick closing above the resistance level formed during the uptrend. So this is the bullish candlestick we are talking about that closed above this resistance zone forming during the downtrend. Once you have confirmed your reversal, you have to identify a potential frying pan bottom. Confirm the reversal using additional technical tools such as the oversold or overbought conditions, using the tool of the RSI, the relative strength index, or you can use the MACD, the moving average convergence and divergence, also to look for an increasing volume on the breakout candle, as it can indicate strong buying pressure. So you can use any of those three candles for your trade setup, while you can also use your volume to depict an increase in volume. If you notice, during the formation there was a decrease, but suddenly there was gradually an increase in the volume candlestick. So this is basically what it means. In this area, gradually we can see a gradual increase in the volume bar. So when you see this, it helps you to indicate that yes, that something is really happening in the market. As you can see, gradual increase. This is a gradual increase in the volume. This is basically what we are talking about. So when we have confirmed the indication of strong buying pressure, we enter the trade by placing a buy order when the breakout candle close above. We place a buy order once the breakout candle close above. This is where we would enter our trade. This is our breakout candle. We enter once it closes above. You can also use a buy limit order at the lead of the frying pan for a potential retest of the breakout. So sometimes you can decide to put a buy limit. Now let's make this resistance area a zone. When we make this resistance area a zone, you will better understand where we are expecting price to retest from. So in this resistance zone, when price breaks through, sometimes price comes to retest after it has broken out with the breakout candle. So you can set your limit order on the resistance area, and that resistance area that is now a support, you place your entry at that place. This is where you can also enter your trade. Now for stop loss placement, which is very crucial, we place our stop loss below the lowest point of the round bottom. This is the lowest point of the round bottom. This enables us to give our trade enough room in case price wants to reverse on us. The next thing is to define your profit target. You have to use a maximum for your profit potential. You have to project the height of the round bottom for the breakout from your first target, extend it to 2 times the height of the pattern for your second profit target, and you can also use 3 times the pattern for your profit target. Meaning, if you set your profit target, if you calculate the price range from the bottom to the breakout point of this area, you can project this 3 times. This is the first time. When you project it for the first time, you mark that area as your first time. You take your tool, you take your indicator tool, you take your tool again, place it for the second time, you mark it at your second time. This is projecting it times 3 times the height of the length of your round bottom to the resistance area. So this is basically where our take profit can be at. So we place our entry at that area, place our stop loss there, and project our take profit to the highest point after projecting it to that point. Or we can go to a fixed risk to reward of 1:3, 1:2, as the case may be. So these are different ways we can put our profit target. We have to also know how to manage our trade. As the trade progresses, consider scaling out of each target level. So you can scale out at this first target level, the second target level. You can close certain positions during those target level. It allows you to secure profit while still maintaining exposure to potential further gains. Additionally, you can also use a trailing stop loss. As price moves in your favor, you protect your profits. Now let's see how we can exit this strategy. To close the entire position, if a bearish reversal pattern forms, once you notice a bearish reversal pattern, this should be a potential sign for you to close your trading position. Always be prepared to exit the market condition when it changes. If your analysis suggests that the trend may lose momentum, exit your position. So this is all about the fry pan bottom pattern. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe, and turn on the notification bell so that you wouldn't miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.